We're live from the nation's capital, Abuja. We are on top. We are at the top, really. We are at Paduma Hills, where if you've been to AIT before, you know, when you're here, you see a very good scenery of Abuja. So we're coming to you live from our studios here in Asokoro, Abuja. So this show doesn't come to you from Lagos. For those of you that will still see me and say, oh, hi, is Lagos. You still do the show from Lagos. Guys, this show I've left Lagos like how many years ago? So we're live from Abuja. My guest is with me right now, virtually from Lagos. Ayodeji Bowu is the managing director, Optimus by Afrinvest. Hello, Ayo. How are you?
Yeah, good morning, Nancy. Thanks for having me.
Likewise. Thanks for joining us. Ayo, I haven't spoken to you in a while. Where have you been? Is it me that, of course, I'm not scarce, am I? So how is everything? How is work? How is Lagos? Today is just a very good weather. Cold morning in Abuja. It's rained, and I can imagine some places would have been flooded here in Abuja. So how is Lagos doing? Ẹ̀yin tèkó,
Bit sunny
ẹ̀yin
here.
tèkó, báwo ni o?
Yeah, a bit sunny here. Yeah,
Okay.
on the island.
Okay, fine. Let's get started. Since May 29, we have a new president now with his famous word on May 29, fuel subsidy is gone. Some people have said that the president was strategic. Some people said he was also sneaky with that, that members of his team did not even know that he was going to say that. But whatever it is, my first question to you really is that, is there a sense of no longer business as usual since May 29 in the country? And how is that impacting the investment space?
Okay, thank you very much. I think from the day of the inauguration, we've seen the area of policies that has been announced and how it has begun to shape investors' expectation. And these are just like the beginning. You mentioned like the fuel subsidies that were that have been removed, and we lately saw that impact on oil prices or energy prices, which also impacted on transportation costs. And we've also seen the unification of the FX market, which also came almost immediately. And we're also seeing that liquidity is also improving in terms of activity within that space. So some of these moves are boosting investors' confidence, but this is like just the starting point. It is how it's been sustained that, and some of the policies that also follow that guarantee the sustainability. Taking different, all these steps are really geared towards attracting investments. And it's really very important. If we're unable to attract investment into the country, we cannot grow as a country. We can't also be able to generate employment, and that would have its implication on insecurity. So you can see that all these things are linked. And I think that one of the ideology or the focus of this administration is to see how we want to encourage private sector participation. It's very obvious that government is constrained in government revenue, but that can't take us to that group we want to achieve. We've always said that to achieve, for us to take a lot, to have an all-inclusive growth, we need to grow at above 5%. And that should be the target of this administration. It's possible, given a lot of the opportunities that we have in the country.
What's more is the investment community expecting from Mr. President beyond announcements? Because it's now been a month there as president. some people are actually expecting more from Mr. President, bearing in mind that the elections were held in February. His, the announcement came, and he had 3 months transition, as it were, to May 29, and he's now 1 month in the saddle. So some investors that I've spoken to have also told me that Nancy, we were expecting him not just even beyond those announcements, however bold he was in terms of, those policy statements, that we expect other things to follow in terms of not just taking off subsidy, but what are the palliatives, so to speak, that you need to bring out to cushion the effect, as well as even FX unification, when he said that monetary policy needs house cleaning. So what more are investors expecting apart from those policy statements that will bring in some kind of
Okay,
confidence? Yeah.
okay, thank you very much. I know for everyone would be expecting that we should by now, with the rate at which the president started, because that's what the most will now be judging based on the acceleration we have seen. Don't expect that there should be any slowdown. So the ministerial list, the quality of the list really matters. We have been polls, and there the key positions should not be politicized, and it should be those that are really qualified, that can drive the sector, especially within the economy, finance, infrastructure. Those are very critical. Security, they are very critical area that would assist and boost investment. But beyond that, would also be expecting more collaboration with private investors. So we know that there's a need to rejig the PPP arrangement, that the public-private partnership arrangement, such that there's a protection for private individuals. So we would see that despite some of the opportunities that we expect private investors to see in, in Nigeria, but because of the enforcement of contracts, one that doesn't surpass one administration, there's always that fear, that risk that you perceive any joint partnership with the government as very risky. So there needs to be policies that will provide that comfort, because there are lots of opportunities. So you see within even if we take for instance the housing space, yes, there's a need to really, there's the housing deficit that needs to be supported. Mortgages needs to be given, but what are the arrangement, the structure that government will put in place that would give comfort for private individuals, developers to come into that space and be rest assured that if any new government comes in, the policies will not be reversed, because this is one major critical part. The infrastructure, our rail system, infrastructure is critical. Yes, the past government, I think, did a bit within that space, but there's a need to accelerate the efforts within that space. The cost of moving goods is really very expensive in Nigeria because you move by road. So if the private sector government can partner the private sector significantly and increase the amount of the rail system, they can improve that, also the road, and that will really help reduce even the costs, because when we talk about palliatives, most times if it's not properly structured, the money just goes down the drain. But if this can be channeled into critical things that would ease the living of Nigerians and reduce the cost, that would really be very important. One major uh, factor or move that would also be expecting is tackling insecurity, kidnapping, herdsmen, fighting farmers needs to be taken care of, because one of the major setback that we have that is impacting on food prices, which is affecting Nigerians, is the cost. The farming activities have reduced significantly in the past few years. So there's a need to provide assurances and as much as possible provide security. So once we see that, we'll begin to see that the cost of food will go down, but even if it doesn't go down significantly, that consistent rise that we are seeing would also be muted. So I believe that there's a lot to be done, and the president needs to make those appointments right now so that a lot of things can be moving at different points, because this is a country of 200 million. There's a limit to what the special advisors can do, based on also some of the constitution. There's a limit to what they can do. So we need the ministers to begin to push things from all fronts. But I must also give it to the president. What has been done in the past, if it's 2 months, if I put the average of 2 months, are also very significant. The removal of subsidy effectively have saved Nigeria by about, based on the estimate, about 7.2 million naira that's for the second half of the year will be about 3.6 trillion. That can be channeled into things that would help. Uh, the the also, NFPC normally remits dollars even to the CBN, but because of the under recovery that they deduct subsidy, that has impacted what is also remitted to the CBN. So um, it's really important that while we should commend for what has been done, but there's still a lot of work that needs to be done for us not to lose that steam, and that confidence is really very important. We are seeing that done. You see foreign investors, when we looked at the data in the equities market, with their expectation increased in May. In April, a contribution of foreign investors were around 14%, and that increased to about 28% in May on the Nigerian Stock Exchange. We're also seeing that interest in fixed income gradually. But after a while, if the right action is also not put in place, then there can be a reversal of some of these gains that we're seeing in the market.
Now, as much as President Tinubu is getting, praises as it is from different quarters in terms of the bold policy statements he talked about, the PMS subsidy removal, as well as the FX unification, saying that the monetary policy needs thorough house cleaning. We saw what the CBN has done in terms of abolishing the Naira for Dollar scheme, the RT 200 billion FX rebate scheme, and what have you. It seems that people are recognizing there's a new sheriff in town. But just like you said, that it should go beyond that. Do you think that the president, and let me bring back what I said earlier, do you think that the president and his team understand the urgency of time in terms of getting these reforms underway as quickly as possible, so that it would indicate to not just local investors but also foreign investors that Nigeria is indeed ready for business, not just by mouth, like he told the Shell people yesterday? That's one. The second question is, how much time are investors, are the investment community giving Mr. President? How much honeymoon period uh, will the investment community give to Mr. President to see what he needs to do, to see his posture and the famous body language, not just the famous body language, but in terms of putting these policies, getting them, getting on the driver's seat and really driving these reforms. Ayo, I hope you understand
Yes,
what I've
yes.
asked in
So,
terms of the timing, because, for example, President Buhari, during his tenure in 2015, when he came in, people were elated, people were happy, there's a new sheriff in town, corruption will go down. And gradually we saw that, you know, we saw that face just go down, and it's been lackluster almost for the past 8 years. It took him 6 months to get ministers. So how much honeymoon phase are investors willing to give Mr. President? Because Mr. President has to recognize that too, and
yes.
his handlers, that you are not just, you've announced, we are looking. But after some time,
Okay. Yes.
you know.
Yes, so very valid. So even as for me personally, I'll be very disappointed that after 3 months we don't have the list of ministerial appointees. That would really very disappointing. But I think that by the time it's crossing about 3 to 4 months, with the pace at which the president has started, investors will begin to be very wary. Everybody being suspicious of what will be the next step. So I think this is really very important that we get that ministerial appointment so that some of the ministry departments and agencies, of course, there are some policy implementation that they are expected to also be able to push out. There may be limitations because there's no direction from the top. For most people will be expecting until when they see their minister to know whether based on giving some of the policies from even the presidency that would be dictated to the ministers, how they can be able to help and sync that to achieve that overall objective. So it's really important. I think that there's a need for an urgent interaction and urgent implementation. You know, we're always very good in Nigeria with formulating policies. Looking at the Presidential Advisory Committee report, you would see that there are a lot of very interesting things that even if we're able to implement 40% of what is written there, Nigeria would be better for it in the next few years. So there's a need to continue with that drive to ensure that the policies that will drive private sector policies. I continue to emphasize private sector because without the support of the private sector, there's a limit to our growth. And most times, you always see businesses that you don't even, government don't need to go into because of this, we don't currently have that structure and capacity. So partnering and coming up with policies with private sector would make us grow faster. Identifying those places, you see, for instance, you look at the let's say the automobile industry, for instance, where there needs to be more collaboration. Can government be purchasing local made vehicles so that there's a demand for local vehicles, and as a result of that, that may also increase production. We need to also look at the you see the mining sector, which has been underserved. Yes, there are a lot of activities going on within that space, but we can't really uh, account for the revenue within that space, which we feel that is sufficient effect opportunity for Nigeria beyond oil. So these are some of the moves that it's sometimes ministers or the advisors that can help implement it. So when if I'm being direct, I think after 3 months, if we don't have that quality, because it's not about even the list of ministers, the quality of ministers really matters for major key positions. Others can be politicized because we may not be able to totally shy away from that, but there are some positions that should not be politicized for us to be able to grow. If not, it would just be dragging even the government itself back, because once you don't have the quality, you can't give what you don't have. If you don't have those qualities of those quality of people in those positions, then you don't expect any positive out. We shouldn't expect any positive outcome.
Um, I even think you're very benevolent to Mr. President by giving him 3 months, which is 90 days. I recall that President Muhammadu Buhari signed a bill into law mandating president-elects and governors-elects to form a cabinet within 60 days. He signed that bill into law in March. So Mr. President has done how many days now? Perhaps 30-something days. So he has less than another 30 days to get his cabinet. And just like you mentioned, not just giving us names, but names that can command attention and names that people, when they hear them, they'll be like, oh, okay, that means that Nigeria is indeed ready for business. But still talking about the investment space, let's take a look at investment versus this high inflationary environment which we are in. The World Bank has said that inflation in Nigeria may get to 25% before we start having a cooling effect to about 20% in 2024. How do you see that playing out vis-a-vis consumers, vis-a-vis businesses, as businesses or even corporate entities? There's what they call greedflation, whereby corporate entities jack up their prices beyond extra costs which they are incurring. This morning I saw that the bread makers, that is the bakers, are sending notices that bread prices will increase. So how do you juxtapose all of this?
Okay, thanks. For the average Nigerians, is expected that based on some of these policies, the knee-jerk reaction in terms of prices is really the pain will be a lot, and that is why it's really important that it is what move we make or government makes from here that would help that will help reduce those pains. Uh, for instance, if we're trying to we look at inflation rate currently at 22.44% and expected to touch 25%, what can be done to bring down those the inflation rate? You see, you mentioned that we mentioned food inflation is really very high at over 25%. It means that that may even be touching about 26, 27%. We need to produce more. And if insecurity is not tackled, we can't produce more. So these are some of the major focus that we should see, that if insecurity is tackled within the next, let's say within the next planting season, we should be able to see improvement in production. And as a result, is the demand and supply. Yes, margin may thin out, but that would also reduce prices. So there's a need that there needs to be policies to be able to ameliorate the consistent increase in inflation price, because that also impacts on the cost of living. And if nothing is done about that, that would also impact on purchasing power. You rightly also mentioned that investors would be concerned that with inflation at 22%, and you see return on other form of investment, treasury bills, 1 year treasury bills is around 6.4%. For the 180-day treasury bills, around 4%. So how do you even want to juxtapose uh, that? Because that gives you a negative return. However, what investors should just also focus on is trying to see how they can at least not maximize whatever savings that they have. The savings account based on the MPR, 25% of MPR, you will get maximum of about 5% on your savings rate. So if you're able to find investments that gives you an average of 10%, commercial paper giving you 11, 12%, that would also be able to help you reduce that inflation gap rather than having idle funds. So it's what would happen is there's a need to strategically think of investing. There's a need to particularly understand how to maximize investments. You spoke about the equities market earlier. The banking sector uh, has gained over 56% this year. Yes, overall market at 20.9%, but oil and gas has gained about 67% half year, gained about 67% half year. And you also look at the agri sector has also improved. So there's a need to also be strategically positioning now, and to see how you can be able to reduce that impact on yourself.
Do you think that all categories of investors would have a way out, will be able to navigate this inflation, high inflationary environment? And let me explain. Um, big net, okay, I think I've even answered my question. Big net worth individuals, for example, people that have, let's say, 100 million, 200 million naira to invest. Do you think that they have a place to play in this market now, despite the higher inflationary environment? Do you also think that categories of people that have 20,000 naira, 50,000 naira, 100,000 naira, 200,000 naira to invest, despite this high inflation, do they also have places that they can put their money?
Okay, yes, and I think government has done something very beautiful in the past regarding that investment space, especially on bonds. There's what we call, I'll start with the retail investors, what we call the savings bond that is issued by the debt management office on a monthly basis. The minimum investment is 5,000 naira.
5,000, yeah.
Based on this, is currently opened, and for the 2 years around 9%, and for the 3 year bond is around 10%. So you would see that if you invest in a 3 year, you are getting twice of what you would have received if you left the money in your savings account. That is if you don't withdraw. And so it gives you an opportunity to be saving something on a monthly basis. They are also very reputable licensed savings platform that you get a minimum of about at least 10% on your savings, and you can withdraw your money anytime. So that is available for the retail investor. Then to coming to the HNIs, the high net worth individuals, commercial paper, for instance, comes at a premium to treasury bills. So, but it's important to know that the credit rating is also critical. You need to understand the credit rating of the CP you are investing in before you invest. But they come at significant premium. You can see them an average of 13, 15%, 15% that you can also invest. So that, yes, may not cover give you up to inflation rates. Because when you look at it's not only in Nigeria currently that we have that negative real return, even in the US, inflation rate is around 7-8%. And when you look at their 20-30 year instruments, is currently around 3%. But the focus is how do you maximize the opportunity that you have, such that doing nothing is always not an option because you are worse off all the time. So you need to be able to sit down and replan. And to be direct to your question, all categories of investors can benefit. For high risk investors, so if you know you have understanding of the equities market, you can also still benefit depending on if you don't want to go in as buying individual stocks. You can invest in equity mutual funds so that the portfolio managers would have done those analysis and you track their performance over time. So I believe this is the time for people to begin to save, try to save, increase their savings rates by cutting their expenses. Yes, I know expenses rate has increased, but there are some that may be able to cut their expenses and you're able to save more and look for opportunities that will be able to add more income to currently what you have. These days, I always also emphasize that this is the time to monetize your skills. You need to learn other skills. One just waiting for one stream of income may not be able to sustain in this particular. That's the reality. So as government tries to come up with those opportunities, it will really help then once you create those opportunities that for people to be able to identify where they feel they can play in, that would really be very, very important.
Okay, I think we'll leave it at that for now. Why I said I had answered my question is even though you've reiterated that all categories of investors would, if you have money, you can really gain from what is happening right now. But you know, they say shoe get size, so play according to your size. So if you have bigger money, you invest, you have a larger pie to get returns from. But that shouldn't also discourage, you know, low net worth investors or the retail investors. For people that have invested in the stock market perhaps like a year ago, today, you said earlier that the banking stocks are really on steroids, so you can imagine what has happened. So many thanks, Ayo, for joining me today. Don't be too far again. So have a wonderful time.
Hope to be back soon. Thank you.
Thank you. Thank you very much. I've been speaking with Ayode Ebo, who is the Managing Director of Optimus by AfroInvest. We've been looking at the investment outlook with this Tinubu's presidency. Thank you all for joining us again today. Please join us again tomorrow for another edition of Moneyline with Nancy. I am Nancy Naji. Be the best you can be and be the change that you want to see. Bye now.